Hello and welcome to Bozeman School District's open enrollment educational videos where I'm going to try and educate you a little bit better on your different benefit options so that as you're electing the different enrollments, you feel that it's the best fit for you, your situation, and your family. My name is Alyssa Pack, and I'm the benefits coordinator. And we have a full comprehensive video to go through all of your enrollment options if you would like. Today, we are just going to be focusing on our ancillary coverage options. Ancillary coverage options are insurances, voluntary insurances outside of health insurance, dental, and the basics. These are all provided through Mutual of Omaha, can be elected separately, together, none, you get to choose. So we're going to go through each of these so you better understand, would this be a good fit for me and my family, and that sort of thing. The first two options are two life insurance options. So we have a voluntary supplemental life and a voluntary accident and dismemberment life insurance. The supplemental life insurance will cover to help replace income and cover expenses, funeral expenses or whatnot. In the result that you pass away, you can also cover your spouse and children. This is for any sort of death, and you will receive that benefit, or your family will receive that benefit. It is a little bit of a pricier premium compared to our accident and dismemberment. This is insurance only if death is caused by an accident, not illness or age. So a little bit higher speculations to receive that benefit or for your family to, but you'll see that less expensive premium. If you do have both, your family will receive both of those insurances. So they can be separate, they can be together, and you can determine what your family might need. I think it's really important to look at the income you do provide your family, any funeral expenses, what sort of debt, what kind of mortgage do you have, to help make sure that your family that might be left behind in a terrible situation would end up being okay. As a new employee, you have a guaranteed issue amount of $200,000. Returning employees, you can increase your issue amount by 10,000 increments each year with a maximum of $500,000. If you want to exceed either the $10,000 increments or the $500,000 maximum, you will have to complete an evidence of insurability, also known as an EOI. They'll just ask you a few medical questions and see if you are eligible for that increased amount. If you are declined, it'll just go down to that lower amount. You'll still be eligible. If you're approved, you will get that increased amount. Again, you can cover your spouse and children. You cannot cover either without covering yourself, just to be clear. The next insurance that you do have access to is short-term disability. This is income insurance if you are unable to work for more than 2 weeks due to medical reasons. So this is going to help supplement your pay if you have small leave banks. I think this is best for that. If you know you're going to be gone from work, or you're afraid that there might be instances that you are going to be away from work due to medical reasons, this is a great insurance for you to help make sure that you're not completely without income through that time. Kind of best examples is maternity leave, treatment of an illness, and long injury recovery. The benefits are payable after 2 weeks, so you have to be medically unable to work by your doctor for more than 2 weeks to receive this benefit. The benefit amount is 60% of your normal weekly earnings. Maximum benefit of $15,000. And the maximum duration is 12 weeks. However, the duration that you'll receive this benefit is not always 12 weeks. It is fully dependent on if your doctor considers you medically unable to work. Some main examples is birth of a child vaginally, they usually allot 6 weeks. Birth of a child C-section is 8 weeks, right? So you're not going to get that full 12 weeks, but it will help supplement that income through those weeks where you're medically unable to work. Of course, you might want to take more time off, in which you'll have to either use leave or leave without pay. There is a pre-existing condition for this one. So for the first 6 months of coverage, if your first time ever enrolling in short-term disability is on September 1st, for the first 6 months, there is a pre-existing condition. So if you make a claim during those first 6 months, they're going to look back 3 months and see if you have sought care or been diagnosed for that condition before that. So unfortunately, you can't be diagnosed with cancer or get pregnant and then enroll. You have to already be enrolled to gain that benefit after that diagnosis, if that makes sense. So just make sure if you're doing any family planning or any worry about your leave banks or anything that you're thinking ahead and enrolling before you need it. Our next voluntary option we do have is called critical illness insurance. Mutual of Omaha likes to call it some sleep medicine insurance. This is a lump sum cash benefit with a diagnosis, a medical diagnosis. Examples being a heart attack, stroke, cancer, organ transplant, or things like that. The lump sum can be used for whatever you need, whether it's out-of-pocket expenses towards your deductible, supplement daily cost of living, medications, different things that you might have to adjust in your life, you can utilize that for. There is also pre-existing condition clauses to this. So if you are diagnosed with any of these conditions before you enroll, you're not eligible for that benefit, unfortunately. But once you enroll, all future diagnoses will be eligible. Here are some examples. You can elect a benefit amount anywhere from $5,000 to $20,000 for you and your spouse. And each of these different percent of principal sums is what you'd get. For example, if you have just a bone marrow transplant, you're eligible for 50%. However, if you have a full-blown heart transplant, you'll get that full 100%. And so just kind of a nice bonus knowing that if unfortunately something happens, you have an extra cash benefit that'll help you get through it, lost work, paying that deductible, and those sort of things. Our last voluntary option insurance that we have is our voluntary accident insurance. This helps supplement medical coverage for injuries after an accident. So it's also a lump sum cash benefit that is depending on your incident, and that can be used to, again, help pay for deductibles, loss of work, extra medical needs, anything that you would like. Here's kind of an example of an accident benefit. You break your arm and you get an ambulance ride, an emergency room, PT, and a surgery. There is a whole list of different cash benefits you'll receive for each of those. And it does have to be an accident. So no long-term knee problems or something like that. I think their speculation is seeking care within 36 hours is what is considered an accident. So just to be aware as you're filing those claims. All right, thank you so much for listening to my ancillary product video. If you do have any questions, please do not hesitate to reach out. I hope you found this a little bit helpful. You can find more information on each of these on our benefit webpage if you want to read a little bit more to better understand what would be best for you and your situation. But otherwise, I hope you have a good day and happy enrolling.